Gang, good afternoon. Okay, getting on, gang members. Welcome to the YouTube channel. I want you to listen to something. Listen to what Cramer said about the semiconductors and the banks.
Finance and tech are this stock market, and it's really rather amazing. I think that this is another stealth rally. No one's talking about it. People want to get out of these stocks. You got to stay in because this is day one. We've got the rally.
This is not day one of the semiconductors and the banks. Let me show you. There's 4 phases to a stock. Okay, right here. All right, the first phase is where I get my gang members in, is right here. When a stock market drops, okay, like right here, when a stock market drops and it stops, all the selling stops, that's phase 1. Phase 2 is when it crosses, the red line crosses the white dotted line and crosses what we call the 32% line right here. That's 32% right there, okay, 32%. And that's, and 32% is right here. See phase 2 right here. See that 2? So think of 32%. That's where we get our gang members in. That's the first day. That's where you try to get in. That's the first day. You always want to get in stage 2. Stage 3 is where you hit the 80%. See the 80%? That's the end of the trade up here. So we try to make the easy money between 32% and 80. We just want to get this bite of cheese out of here. We don't need the whole 100%. We just need from the 32 to 80 because that's the easiest money. Why is it the easiest money? Because, let me show you on this chart. Because what happens is when, as I say, when all the selling stops, everybody who sold short right here, phase 1, they turn around and they start buying. They have to buy. They have no choice because they sold short. They have to get their shares back, buy their stock back. It pushes the market up. When that happens, the institutions like Dodge & Cox, Northern Trust, the mutual funds, the pension funds, they will buy when it gets to stage 2 right here. This is stage 2, or what we call the 32%. And I just showed you the 32%, okay, right here. So that's the 32% on the chart, all right? 32%, and then they get out at 80%. And here you are, stage 3, okay? And this is your 80%. Now, why do they get out at 80%? That's the end of the trade. This is called the easy money from stage 2 to stage 3. Why they call it the easy money? Because you got all this new money coming in here is being pumped into the market. Got all this money being pumped into the market from the shorts now going long. And that means on the way up between stage 2 and stage 3, as the stock pulls back like it did here, and it pulls back, no big deal. It just continues on its way. Stocks go up 65% of the time. Remember that. But you can increase that to 85% by following the rules. If you just only wait and get in at 32%, be patient, where you got most of the money coming in, and you get out at the 80%, okay? Because the other stage 4 on this side, there's no money over here. And that's why we mostly short on this side. So that's how you know that no way is this the first day of the trade, okay? In fact, this started many days before, as you can see. Many days. To get you in here, you missed the action. And what you did, you increased your risk big time. In other words, you ended up buying a bus ticket from Boston to New York for $200, and you got on the bus a half a mile outside of New York. That doesn't make any sense, does it? Okay, same thing when buying stocks. Join my gang, Phil's gang. See you on the charts.